Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this September 7th. So what a power rally in the markets today. Certainly we're getting that oversold technical bounce. You can see on the intraday basis here on the SPX that we basically opened around, let me just find the 7th, which was over here. We opened up, had a little bit of a rally, and we just never really ever looked back. The markets continue to bounce, and hold support. You can clearly see on an intraday where the resistance lies. So if we draw a trend line all the way across, connecting your pivots, other pivots, you're forming a little bit of a down-sloping wedge pattern. And if you look at what the down-sloping wedge pattern is, connecting these major pivots, which let's just go to a little bit of a longer time frame, the hourly chart. You can see pivot to pivot to pivot chop, which we never ever really confirmed and broke below. Technical support was held, and we're getting a short little bounce. Now the question is, are we going to see some sort of a pullback like this? We are at resistance. Markets need to consolidate and make a move for it if we want to continue to see this upside. Now, that being said, there's a lot of economic data that is coming out which could inevitably keep these markets in this tight range-bound wedge pattern, almost, sucking out the bulls and putting in the bears right before we could potentially break up on the SPX. Now, one of the reasons why the markets bounced substantially today, if we flip to the daily chart, let me just remove that. Let's just flip to the daily chart so we can see the price action. It's truly incredible how this support zone has worked out. We were hammering, but we said, listen, you have this reversal signal here on the SPX. We never ever got a close below that wick high despite piercing it. And you had the dollar soaring and making new highs while the markets weren't making new lows, which showed a little bit of relative strength. We telegraphed the fact that we saw distribution happening in the dollar. And look at that sell-off, a beautiful reversal candle. And not to mention, is it currently only a bearish engulfing candle, considering that you've engulfed this, almost this low here. You're also breaking out of this wedge pattern. If we go to our hourly chart, we were watching this upsloping wedge pattern. Did we not tell you that upsloping wedge patterns are likely to break lower? And that's certainly what we got. If you look at this move on the dollar and why our markets are in dire straits, simply when you have a full percentage move from the 110.78 level all the way down to the low here, that is extreme volatility in the currency markets. That is just ridiculous in terms of asking for massive volatility in the markets. The fact that we had this swing in the dollar, the biggest currency basket in the world, the biggest market in the world, is truly exceptional and one for the ages. But clearly see the power of these upsloping wedge patterns at resistance in an overbought state. If we go to the weekly chart, you can see that you hit this pivot to pivot, and look what you just hit. You pierced it. And now the thing about the dollar, and this is going to be critical, because if we close the week lower and the dollar puts in this weekly reversal signal, that means the dollar has likely put in a near-term cycle top, and you could actually trade all the way back down to this down-sloping parallel channel before the dollar could see somewhat of a new type of rally ensue. So the big question is, how are we going to close this week? That is going to be critical. If we get a reversal signal of this magnitude, the dollar will likely see downside, which means equities could see some potential upside. And this is why we've been accumulating slowly and buying since over the last basically 1, 2, 3, 4, 5 sessions. We've been slowly accumulating long positions while we're covering our shorts. We offloaded, I think, 7 or 8 shorts. We've accumulated about 6 or 7 longs. Just trading these markets back and forth, finding a groove, finding the flow, and looking at intermarket analysis. And the fact that we called this and telegraphed this bounce is just truly perfection. We've loaded up on gold and silver miners. We have the emerging market play like STNE, which had a power move. I mean, up 6%. Look where we picked this up. Boom. We're almost into our double-digit gains already on STNE. Toyota, we added more beautiful reversal signal on volume for Toyota. We're in the money on that slightly. So beautiful job on picking up some of these, the likes of Net, which we have accumulated. Again, Net we accumulated this morning, and look at this beautiful add level. One of the reasons I accumulated this is that you filled this technical gap. You were starting to increase volume. You were at support. You've basically had this initial pop and rally, which has come into this technical level again where you initially had that breakout and surge on earnings, and we've basically negated the whole bubble movement where traders push this up speculatively, and now it's likely that this price action can at least test the top of this channel around the 67. I do have it priced in as major resistance at that point in time. This will obviously coincide with the market if we intend to get a bounce. So amazing job. If we look at the QQQ daily, the QQQ first resistance will be this upsloping trend line. Whether or not we recapture that is going to be a massive level. If we fail, these markets are going to be in dire straits. And I certainly think there is a strong probability of the markets failing at these resistance level and starting the next leg down. Just due to the fact that this type of bounce, the first initial bounce wasn't that robust. It was met by more and more selling. And now you're slowly starting to get a bounce, but the fact that there were so many sellers emerging after that first initial bounce just shows me that the market sentiment is still extremely bearish. And if volume picks up, if yields spike a little bit more on the back of the interest rate, around the September 21st mark, then certainly tech will see a lot more pressure. But overall, the Nasdaq was up just over 2%. The Dixie, the dollar, was down 0.62%. Taking a look at crude oil, a massive drop again. This is the lowest level crude is trading in 9 months. Great for the consumer. Red flags screaming for the economy. As an analyst, this type of price action where energies are leading the fall now is certainly something that you should be paying attention to and concerned about, because energies fall 2 times faster than the equity markets. But once they both start falling like freight trains, that XLE sector that was propping up the S&P for a small time of this year is now starting to falter as well. If oil continues to decline, there are some buy levels I'm eyeing up. We're actually into one right now, which could be a potential opportunity, but I'm waiting a little bit lower. I think my first level that I'm going to be accumulating some oil is around the 79. It'll also happen to coincide with the downsloping parallel channel here. Major pivot support over here. A little bit of chop pivots. So I think accumulating oil at these levels is going to be critical. Let me just erase some of these lines. But I do think that we have to be very nimble in this sector, because if the dollar gets some more momentum behind it and the economy really starts to wane, then we could certainly see more downside in the energy sector. And we don't want to really be caught in a falling energy sector. If we take a look at natural gas, another down day for natural gas, down about 2.4%. Still very close to where we covered yesterday or sold our KOLD. I have to think that it's trying to chase this gap fill. This gap fill also coincides with a 50% fib retrace, and then you can see these major pivots over here. So that might be if we go straight into that tomorrow, I might consider a little bit of an intraday trade, maybe even a swing trade on natural gas. But again, this is very dangerous considering the momentum to the downside that the natural gas has. So just kind of like this area where natural gas had that big sell-off, you might get a little bit of a pop here, from this low here, 715 to the high. That's a pretty big gain for natural gas, especially if you do a double leverage ETF. So, you're looking at 11% gain there. So we could see some sort of a bounce in natural gas at this level. Maybe a 10% bounce takes you roughly to this wick high, and then you could see the next down leg start to form in natural gas. I do think natural gas will eventually see this lower range of the channel, but until that level, we'll just have to see if we can trade in and out of the swings. Let's touch base on gold. Gold had an impeccable bounce. You can see gold is substantially up on the day, just up almost 1%, a beautiful move in gold, and it's actually holding near the highs. That is directly correlated to the dollar. So overall, gold has kind of formed that double bottom, and the big question is, can we start to recapture this and start trading inside this channel again, where we were bullishly consolidating before we failed due to a surging dollar. Let's take a look at silver. Silver is also a really interesting chart. Massive move on silver today, up 2.46%. So that's great for our SLV position. And considering we added down here on the SLV, and we're also, in Pan American Silver. Let's just look at PAS, PAAS. So we're in Pan American Silver as well. Slightly out of the money, but a beautiful surge on that, up 3.87%. Let's take a look at the GDX. We do have some mining exposure. Again, a beautiful move on the GDX. So you can see we're almost in the, actually I believe we are in the money on the GDX just slightly. But again, I do think that if the dollar continues to wane, we could see quite a substantial amount of upside for the metals. And you know, where I think we could see the GDX rally to, this is our first big resistance level. Once we get to this level here, that's going to be basically a key level where we want to see GDX really start to consolidate and hold that range. Whether or not we get into or take profits at that level, time will tell. It certainly meets our criteria for taking profits at that level. But if we get a sort of a very stable rise in this pattern, then I'm more inclined to hold GDX higher. Versus if it's a straight shot into there, I'm likely more inclined to sell it. So it was an amazing job, the fact that that dollar finally came in. I'm just trying to see if we can touch base on anything else. We did a beautiful job in our day trades. We covered CNQ for a lovely over 10%. That was a swing trade. And then yesterday we held our ISEE short overnight. So that was a beautiful job. We made a lovely gain first thing in this morning. So it's amazing. I just want to show you actually FSLR. So FSLR is so interesting. These clean energy stocks have been ridiculously powerful to the upside. Now, one of the reasons I'm shorting FSLR and Enphase is because these sectors have been the most powerful sectors. And when you have a move like this, over 100% move without any consolidation, you had a little bit of a week here, but honestly, that wasn't even a week because you still finished positive. There's no downsloping consolidation. So you've had a straight shot from this lower level of 61 all the way up to 130. Now, look at this key level. So first things first, you have this trend line connecting the start in 2006 to a major pivot, and look what you're hitting right there. Boom. Okay? And now you also have this, and this is the weekly time frame, so this is extremely long-term view. Then you have this symmetrical channel, which we've been watching. Major pivot kissed, major pivot, and now look, intersecting. So you have two technical factors. And then when we throw in two more, this is a 4-factor trade at this level. We take a look at the weekly chart. This is a technical gap fill that was left open from 2011. We just filled that today, this key technical weekly gap. Boom. What's the probability of gaps being filled? Around 90%. So we filled this key technical gap. You had a retrace to a massive fib level that was basically from your 2006 to 2007 blow off top. So you're at major resistance. You're in an extended state. I think it's only momentarily before we get some sort of a sharp pullback, even to around this previous pivot high 120, which would be a lovely gain in our pocket if we decide to take profits. But you can see the type of moves that these stocks do. And you know, you have this basically powerful rallies and then harsh sells. Powerful rallies, harsh sells. We've had a powerful rally. When's the harsh sell coming? It's likely coming very soon. Based off of how this stock moves, you're coming into some symmetrical measured move patterns. We're going to take this high to this low. It's very similar to this low to this high. So again, in an extended state, multiple factors, technically speaking, this is a high probability of this coming in the coming sessions. And I certainly think we're going to see that sooner rather than later. We also, let's see if I can touch base on anything else. Bitcoin, BTC USD chart. So Bitcoin's very intriguing. Let me just flip to the daily. Bitcoin broke down yesterday, fell below this previous 2017 high, but you're rallying back now. And you have not confirmed once again below this trend line. Just like over here where you pierced it, rallied back, pierced it, rallied back, pierced it, rallied back, pierced it, rallied back. You never really confirmed. It looks like that is what's shaping up again, but don't be so bullish if we don't get confirmation, because this is still a technical bearish pattern that is unfolding. What I really want to show you is if we flip to the weekly chart of Bitcoin, and Bitcoin is very intriguing. Let me see this chart. So Bitcoin has been trading in these, basically this parallel channel from the high to the low, and for the first time since the COVID crash, you're actually confirming or trying to confirm on a weekly basis below this parallel channel. On a technical basis, when you're breaking this type of support zones, that is extremely bearish, and one has to be very careful with how they're positioned. So if we take a look at Ethereum, so again, Ethereum is relatively holding up a little bit better than Bitcoin, but again, you can see that we're trading now in between these two channels. You have this main trend, which is obviously going to provide some support, but you can see you bounced off of support over here, which means that if you come into this level again, the support won't be as strong. And then you also have this downsloping parallel channel, which acts as resistance. So I'm in the camp that Ethereum sees a lot more downside. I think you have to, at minimum, go back to your mean reversion channel, which is, let me just let the chart load, which is this channel over here, which connects you back in 2018 high, your lows here in 2020. I think that's going to be your next big area of support as Ethereum drops into the 500, 600 level. So that's kind of what I'm expecting and waiting for. I do think the worst base case price for Ethereum is going to be around, I calculated around $236, I believe it was. So that is kind of my worst case scenario for Ethereum. So that substantially would be a big fall if it managed to fall. Let's just do another check on the DXY. 2 hours left in this candle, and we are still seeing downside occur. Look at this move. If we flip to the intraday basis where we may find support on the DXY, it's looking like, let me just let the charts load. Sorry about my Wi-Fi connection. So if we look at where support might be found, if we take a look to see, we have some key pivots over here. So if we draw a trend line across all the way over here to here, let me just drop that down a bit, you're going to have two big areas of support. This orange line first and this yellow line second. Those are, I think, where the dollar finds some short-term support before potentially consolidating, making a bear flag, and heading lower. Eventually, I think we come down here to fill this key technical gap around the 108. And then we'll just have to reassess from there. So I do think there's potentially a bounce in equities that can continue slightly, which is why we're holding on to some of our longs. But overall, with the dollar pulling back, that is going to be short-term bullish for the markets. But yet again, even if we're still trading around these 107, 109 levels, that's still a tremendous amount of pressure on the overall global market, and one should still be vigilant about position sizing, long positions, because even if the dollar is still trading above 109 or it's having a pullback, even when it's still at these lofty levels of above 105, that is really the sovereign debt crisis levels, where if it's trading above 105, that still puts an exorbitant amount of pressure on everyone around the world, which could foreshadow some sort of a sovereign debt crisis. So let's continue to watch the dollar. Great job on our profits. Great job on picking up longs left, right, and center as the inevitable market bounce came. That's certainly what the charts were telling us, which is why we accumulated slowly at key technical levels. And we'll just have to see how those long positions play out. But if we get a continued upside tomorrow and the next day, be ready, because I am not shy to pulling off profits and taking those profits sooner rather than later, because I know the overall trend of this market is still much lower, considering we have a Fed, considering we have lots of economic data ahead, and considering that QT is set to take effect in 95 billion a month. So stay tuned for more price action. We'll see you on the charts tomorrow. Please give this video a big like or comment down below, and